clearly the reason what we're picking up so far as to why India might be staring at a bear market is one, there is a slowdown with regards to economic growth, a decline in terms of private consumption. Q2 and Q3 earnings have been a pain point as well. And there is uncertainty with regards to where Trump 2.0 regime goes. With all of this, if you talk about the US economic data, the impact that it's having on the dollar and vice, and taking it forward, the kind of impact it is having with regards to the yields leading to a weakening rupee. So what all of this actually adds up is going to be interesting for us to watch out for. Clearly, we've seen a decline of almost around 12.5% from the peaks in terms of Nifty 50. We're 8.6% away from the bear market. And a fall below that 21,021 mark would actually mean that Nifty has entered the bearish zone as well. In the past couple of years, if you see the data on the screens, that will tell you the kind of declines that we've seen and the years where we saw this as well in 2020, 2016, 2011 and 2008. These are the years where we've seen those kind of declines that have come in. In fact, let's also welcome in our guest Sameer Dalal at Natverlal Sons and Brokers to talk to him about the markets as well. Sameer, firstly, good afternoon and welcome to the show. My first question coming to you is specifically with regards to where the markets go. What is your read? We are around 8.5% away from that bear zone. We've already entered that correction phase. A lot of events which are ahead of us as well in the macro front. How do you read? What do you read, I would say?
Good afternoon, and thank you for having me on your show. Yes, we have seen a bit of correction. We are 12% away from the highs. But if you look at the run-up, and I heard you discussing how the market caps have been wiped out in huge numbers, 56 lakh crores and all of that. But you also got to look at the fact that over the last 4 years, the kind of wealth that was created when the run-up happened, now those valuations at the point of run-up are probably unsustainable. So the correction of course, it has to do a little bit with the fact that earnings have been disappointed, but it has to do more with the fact that the valuations have got very overstretched. And even after this 10 to 12% correction that we are seeing in the market, the valuations are probably still above the mean average. So can the market continue to have a sideways to a slightly downward bias? Yes, I think absolutely it can. And what you rightfully said, there are two big events lined up over the next 15 days, which could determine some movement in the market, in the direction of the market, and add to the volatility. The first being Donald Trump 2.0, which you said, where we do not know what kind of duties he's going to put, how it's going to hurt companies, global trade, and things like that. And the second being the Indian budget. Now, the budget, I think, would be a less of an event, given the fact that we had a mid-budget that came in September post the election. So hopefully there's not too much tweaking that is done to that. We're just hopeful that the government gives good indications that the capex spends will remain strong, given the fact that this year has been kind of a disappointment when it comes to the government spend on capex. Apart from the capex spend, what we also want to see is how they're going to manage the fiscal, and I think that also should not be too much of a problem, given the kind of tax collections and all that we are having. Now, coming to the immediate trend of the market, like I said, the downward slight bias could remain, given the fact that you have FI selling and you have flight of capital to safety. Interest rates in the US have moved up, which means the interest rate cut that was probably expected in the Indian markets may be pushed back, because it removed, when you have the currency taking a hit and when you have international interest rates moving up, it becomes very difficult for the RBI to say that we're going to cut interest rates as well, for the simple reason that it could lead to further dollar outflows, especially from the bond side. Which is probably not something that the Indian government wants, and to have to have the currency slide further. But there are so many moving parts that will happen over the next maybe 15 days to a month that we need to wait and watch. Markets are throwing out good buying opportunities in this correction. So where you feel value is good, where you feel the domestic industry will continue to grow without being hampered by changes in the budget or changes by Donald Trump, I think those are go ahead and you can go out and buy them as well.